I don't have a particular view on how many years in a particular cycle. My view is based on how much money is going to be printed at the end of the day. We know the Bitcoin technology is solid. Of course, there could be something that happens. That's not really the question here. The question is how much money is the United States going to print? How much is China going to print? How much is Japan going to print? How much is the Eurozone going to print? Those four economic blocks are the most important. I mean, I think next year is going to be quite interesting. I would say my price target is between $100,000 to $250,000 for Bitcoin by the end of next year. I still think that we could get to $100,000 in 2025.
Donald Trump's re-election may spark a cryptocurrency rally, perhaps pushing Bitcoin's price to new heights. With Bitcoin's current price above $75,000, some expect it could soar to $1 million due to inflation concerns. Trump's policies may hasten this tendency, but only time will tell whether Bitcoin will become the safe haven asset that many anticipate. Notably, experts such as BitMEX co-founder Arthur Hayes are similarly optimistic. In a recent interview, Hayes predicted quantitative easing, inflation, and a likely Bitcoin price increase to $1 million as a result of global economic trends. His predictions are consistent with current market sentiment, which is positive. Arthur Hayes predicts a period of instability and volatility following the U.S. election, citing the country's debt predicament and desire to maintain military superiority. He predicts that Bitcoin's price will range between $100,000 and $250,000 by the end of 2025. The U.S. government's spending, particularly for healthcare, defense, and interest payments, is surpassing nominal GDP, indicating a possible problem. In 2023, federal net outlays as a percentage of GDP were 22.13029%. He also mentions that the U.S. debt-to-GDP ratio is concerning, but stimulus packages can assist in alleviating economic growth problems by putting money directly into people's hands. Hayes points out that Bitcoin's value is linked to the quantity of money being printed by major economies, notably the US and China. Watch clips from the interview to hear more about Arthur Hayes' perspective and his conversation with Altcoin Daily. Don't miss out on future exclusive content. Like, subscribe to our channel, and enable post notifications. Thanks for joining us again. Enjoy the video.
I don't have a particular view on how many years in a particular cycle. My view is based on how much money is going to be printed at the end of the day. We know the Bitcoin technology is solid. Of course, there could be something that happens. That's not really the question here. The question is how much money is the United States going to print? How much is China going to print? How much is Japan going to print? How much is the Eurozone going to print? Those four economic blocks are the most important. And so if you have a view on that, then that should inform your view about the amount of credit that's available in the system that wants to find a home in a fixed supply asset with infinite duration, and that's Bitcoin. I mean, I think next year is going to be quite interesting. I would say my price target is between $100,000 to $250,000 for Bitcoin by the end of next year. I still think that we could get to $100,000 in 2025. I was going through their latest Treasury quarterly refunding announcements. And so the Treasury Department prepares a report to the TBAC, which is the Treasury Borrowing Advisory Committee, which is made up of a lot of the large too-big-to-fail banks. And so the Treasury, the state of the U.S. economy and spending and their outlook for bills and coupons. So in the latest report, they break out the top four spending items of the U.S. government. And so number one is health and health services, plus social health care for the poor, the sick, the indigent, the old. And then you have defense spending, Veterans Affairs, which is the U.S. government's military stuff, right? They're going to go bomb everybody around the world. That costs a lot of money. And then you have the Treasury's interest payments on the debt funding, the deficit to pay for those basically four line items in the spending bill. And so if you look at in total those four things or five things, they're all growing faster than nominal GDP. And so the economy is growing slower than the spending of the federal government. And so that's the problem. Now, there's a very easy way to fix this problem. And we saw this between 2020 to 2023, when Trump and Biden each did a stimulus program that was financed by the Fed. So the Fed did QE to pay for the Treasury's borrowing to hand out stimulus checks to everyone. Now, the contrast to what has happened from 2008 until 2020 in the United States, where I call it QE for rich people. The Fed does quantitative easing. Assets end up in rich people's hands, stockholders, there's buybacks. I know they buy expensive real estate, they buy art, whatever, but it doesn't end up in people who are actually going to spend it. And therefore, banks aren't going to lend money to companies to increase production because the majority of the US population is no better off for quantitative easing. And what you see is a money multiplier of 1 and no real economic growth created and a rise in debt to GDP. But Trump and Biden changed that with the stimulus checks, where they handed out money to everyone. And what did people do? They're poor. They spent it all. And then what was the government doing at the same time? They were saying, hey, we want factories. We want green energy. We want it built here in America. We're going to provide tax credits and subsidies to companies who do this. And so what companies did, they put together the program. They applied for the money from the government. They went to a regional bank, a non-too-big-to-fail bank, and they got a corporate loan. And so if you look at the amount of loans issued by small to medium-sized banks in the United States from 2020 to 2022, you see a market increase, even as the Fed is raising rates, because there's real demand that companies need to increase production for because the government's paying for it. And so you saw the debt to GDP ratio actually fall. The US government deleveraged because nominal GDP growth was running so hot. Obviously, inflation ran hot alongside it, but the government is actually deleveraging itself. So we have QE for rich people, 2008 to 2020, QE for poor people, 2020 to 2022, and then the bondholders revolted, and so they went back to QE for rich people, 2022 until the present.
Arthur Hayes expected that the U.S. government would re-industrialize to create more weapons and goods, transferring supply lines from China to the United States and Western Europe. This requires large investments, possibly through quantitative easing and industrial policy, which could cause inflation. Hayes believes that this environment will help Bitcoin, potentially raising its price to $1 million. He predicts that Western Europe, China, and Russia will adopt similar strategies, encouraging global inflation. He believes budget cuts are unlikely since they would undermine the economy. In terms of altcoins, he prefers Ethereum over Solana in the coming 12 to 18 months, noting Ethereum's potential for larger transaction volumes and lower transaction fees. Hayes thinks Ethereum will outperform Solana, but does not have a specific price target. Let's go back to the interview and watch more clips to gain insights from Arthur Hayes.
Now, the problems with the US government are pretty intractable, right? They outsource the entire manufacturing base to China, and now the United States plus NATO, who have a combined GDP of 22 times that of Russia, cannot beat them in Ukraine. And so that means that the United States needs to reindustrialize so that they can produce more weapons to go and more people up, right? That's what America does. And that means that every single supply chain thing that comes from China needs to go back to America or Western Europe. And that's extremely expensive because if you look, I don't have the numbers in front of me, but if you think about the trillions of US dollars of bank credit that China provided to real industry to build the things that are necessary to make the products that make them the workshop of the world, that's in the single digit to tens of trillions of US dollars of bank credit. The United States needs to do the same thing, and they need to do it faster because they have wars to win. And so that's why I think that QE for poor people, which means industrial policy, bank credit for favorite industries, semiconductors, manufacturing firms, weapons dealers, those type of folks, and treasury handouts so that people can afford their healthcare. That's what's coming, and it's going to be massive. So that's why I think that in the medium term, Trump or Harris has to do these things. They're not saying, hey, I'm going to stop doing wars. They're not saying, hey, old people, you're not getting any more healthcare. And so this is the only way to pay for it. And the only way to pay for it where the economy is actually growing and the government is deleveraging itself is to do QE for rich people. And if you looked at the amount of dollars that were emitted between 2020 to 2022 in the stimulus programs, 40% of all dollars that were ever created were created in those 2 years. And so QE for poor people is massively inflationary. And we all know what happened to Bitcoin. What was it, 3,000 to 69,000 at the top of that bull market. So I think we're going to see an insane upside price potential for Bitcoin as the United States pursues this policy. And obviously this isn't done in a vacuum. Western Europe needs to do the same thing. to beef up their security. China and Russia aren't going to sit around and not do it as well. And so everyone's doing the same thing. No one's really saying I'm going to do austerity, balance the budget. No one's trying to be like Argentina. If you look at Argentina, yeah, they balanced the budget, but industrial production was down 20% recently. So that's a revolution right there if you have that in any sort of fractional banking society like the US or China.
Is Bitcoin to $1 million inevitable?
Oh, I wouldn't say it's inevitable. I think it's a very high probabilistic situation if the amount of credit that has to be emitted to solve these problems happens. Of course, there's a risk that the population says, I don't want that. We want austerity. We want to tighten our belts. We want to live within our means, and we want to destroy a lot of businesses because that demand is fake. It was paid for by printed money, and so we have to extinguish that credit and go back to a more sustainable economy. That is a risk, a very big tail risk. I don't think it's going to happen, but that could happen.
Ethereum or Solana in 2025?
I'm going to go with Ethereum. And the reason is, again, I'm still running the numbers here. Solana is done because revenue on the chain has gone up massively as transaction volumes have increased. And, on a net issuance basis, they've sort of overcome the persistent unlocks that are happening. But the larger you get, the harder it is to go faster, right? The law of large numbers. And so I think Ethereum really has the potential here, as the transaction fees and L2s continues to decline, to really gin up transaction volumes. And on a relative basis, from where Solana has come from to today, it's going to be harder to repeat that feat. And so the marginal sort of utility or diminishing returns of what's going to happen for a Solana holder is going to set in at these levels. And so I think that Ethereum could be a better bet over sort of the next 12 to 18 months.
Ethereum is, I forget, maybe like 2,500 today. Is a 10K Ethereum reasonable for this cycle?
I don't know if reasonable is the right question. Could it go up 4x?
What do you think?
I don't have a price target on Ethereum in mind. I'm sort of more focused on sort of like creating numbers for Bitcoin. Ethereum it'll do what it does. I do think it'll perform better than Solana.
Hayes believes that as people become richer in Bitcoin, Ethereum, and Solana, they will spend their money on cultural objects and funny jokes, making meme currencies potentially profitable. He's working with Maelstrom and Oil Wallet on an Airheads generative collection based on the Ordinals framework. Regarding the Fed meeting on November 7th, Hayes anticipates that the outcome will be determined by the election winner. If Trump wins, Hayes believes the Fed will remain unchanged, leaving markets confused about post-January intentions. Hayes adds that his opinions about altcoins are personal and hypothetical. He enjoys interacting with meme coins, but Bitcoin remains his primary focus. Hayes' perspective on the Fed meeting emphasizes the possible impact of election results on monetary policy. Arthur Hayes' approach to altcoins is opportunistic, looking for potential profits in a speculative market. As we conclude, do you think Trump's re-election will accelerate the scenarios spelled out by Arthur Hayes, such as quantitative easing, inflation, and a potential Bitcoin price surge to $1 million? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.